Welcome back to Market on Close. I'm Oliver Rennick. Let's talk some more about today's big swing in stocks. Starting off with a nice pop. Didn't last very long. I want to bring in our guests from the CME. We've got Chris Gersch joining, Director of Strategy at Bell Curve Capital. Chris, thanks for being on with us this afternoon. The big reversal in today's market comes on the back of a 5-day period, basically, in which stocks were rallying and VIX seemed to be kind of charting its own path, not really moving down. Tell me what you think of the volatility landscape right now.
Yeah, the volatility landscape right now is that 15 level is held. Actually, going back a couple months here, that 15 level we bounced off of 1550, almost 9 trading sessions. And that being said, we did have a little creep up. We had higher lows, higher highs off of that morning session as we actually saw oil pull back a little bit. But that double top in May at 1950, that seems to be the upper threshold. And with the Fed going dark essentially for another week or so and G20 coming up, I don't see anything getting us out of this 1550 to 1950 range.
So are we just learning, Chris, that our range for volatility is shifting upward since last year? I mean, we see the way the market has responded, or maybe just changed a little bit since that vol event of January 2018. We haven't gotten back to single-digit VIX. We've averaged a higher VIX. It's not a coincidence, right?
Yeah. Well, you couldn't have said it better. I mean, the days of the 9 to 11 range in VIX, I'm glad to see those gone as a trader. But that being said, we do have a creep up, and a lot has on the commodity side. Obviously, and I started off in the soybean options pit. Commodities been getting torn up lately. Oil's been moving. Gold's been moving up, so that commodities, the underlying commodities, have really caused a concern for some of the volatility sweeping over to the equity index.
Is there, when we look at this, the other thing that stands out to me, kind of in the same realm as what's going on with crude. We've got another day where crude was struggling. We might end positive here a little bit, but has really had no bid, while the stock market is just in a rush to get back to all-time highs. And I wouldn't, hammer this to our viewers for a week if it weren't for the fact that throughout all of 2019, it was lockstep S&Ps and crude, and all of a sudden it just breaks.
Yep, that correlation broke. I mean, the fact that you've got the Russian energy minister coming out and basically saying he doesn't care what OPEC says. You got the information going down with Venezuela that we just heard about these last 2 days. Should add some volatility. You've got China and Mexico trade concerns, and this is like the perfect mix for oil to catch fire, and it really hasn't. That really goes to show that America is a real true independent energy nation, and we continue to see a glutton of growing. I think a big point that isn't often covered is the fact that here in the Midwest, tractors are finally in southern Illinois, southern Indiana, turning for the first time. And I think you had a huge diesel buildup. You had a pipeline closed down for the Cushing, Oklahoma center. So that being said, I think there has been a glut of a demand shortage just because people, especially those farmers, haven't been able to turn those tractors.
I see. So the last thing here is there a case to be made, which is sounding like the one you're making, that maybe there's some oil-specific kind of supply-related things going on? Because the more alarming way to interpret this, of course, would be to say, well, there's no confirmation in this risk asset of crude that is happening relative to the stock market, which seems to be saying something about, I don't know, something.
Right. No, 100%. And I think you've got that bid with all those global macro concerns. And then you've got the Fed has been a big fan of oil, I think a big supporter of oil. I don't think it goes below the 50 handle on the WTI until we have some breaking news. And so ultimately, I think it stays range bound right now, 50 to 53.5, and maybe upwards of 55 handle. But we're in a $5 range right now that's set to maintain for at least another week or so.
Yeah. All right, Chris, good stuff. An important analysis on an odd day for markets. Chris Gersch is Director of Strategy at Bell Curve Capital, joining us here from the Mercantile Exchange in Chicago. We'll be right back. It's time for the Closers panel.